Bitcoin halving is one of the most anticipated events in the world of cryptocurrency. But what does it really mean? And why does it matter so much for Bitcoin and its future? In this video, we're going to break down what Bitcoin halving is, why it happens, and how it impacts the market. Hi everyone, welcome back to our channel. Today we're talking about Bitcoin halving, one of the most critical events in Bitcoin's life cycle. Whether you're new to cryptocurrency or a seasoned investor, understanding Bitcoin halving is key to understanding how Bitcoin supply works and why it's such a big deal for the market. So stick around and let's get into it. Alright, first things first. What exactly is Bitcoin halving? In simple terms, Bitcoin halving is an event that happens roughly every 4 years where the reward for mining new Bitcoin is cut in half. This process is baked into Bitcoin's code and will continue until all 21 million Bitcoins are mined. When Bitcoin was first launched in 2009, miners earned 50 Bitcoin for every block they successfully mined. After the first halving, in 2012, that reward was cut in half to 25 Bitcoins. In 2016, it was halved again to 12.5 Bitcoins. In 2020, it dropped to 6.25 Bitcoin. And in this year 2024 halving, it's now 3.125 Bitcoin per block. So why does this happen? Bitcoin halving is part of the cryptocurrency's deflationary design. It ensures that over time, the rate at which new Bitcoin enters circulation slows down, which helps control inflation and ensures scarcity, much like gold or other finite resources. Now that we know what Bitcoin halving is, let's talk about why it's such a big deal. The main reason is supply and demand. With each halving, the supply of new Bitcoin entering the market gets cut in half, but the demand for Bitcoin doesn't necessarily decrease. In fact, as more people learn about Bitcoin and its potentials, demand often increases. This dynamic can lead to upward pressure on the price of Bitcoin, which is why many in the crypto space pay close attention to halving events. Historically, we've seen that Bitcoin price tends to rise significantly in the year following a halving event. For example, after 2012 halving, Bitcoin's price rose from around $12 to over $1,000 in just a year. After 2016 halving, it surged from $650 to almost $20,000 by the end of 2017. But remember, this doesn't mean the price will always rise immediately after a halving. Markets are unpredictable and other factors like adoption, regulation, and macroeconomics condition can also influence Bitcoin's price. Now, what about Bitcoin miners? How does halving affect them? Well, since miners receive few Bitcoins as reward after each halving, they might find it harder to remain profitable, especially if the price of Bitcoin doesn't increase to offset the reduced rewards. Mining is an energy-intensive process, and with rewards shrinking, miners need efficient hardware and lower electricity costs to stay competitive. If too many miners drop out after a halving, the Bitcoin network would see a temporary slowdown, but this is usually corrected by Bitcoin's difficulty adjustment, a mechanism that automatically adjusts how hard it is to mine new blocks. However, over time, as Bitcoin becomes scarcer and potentially more valuable, the rewards for mining could still be worthwhile even after multiple halving events. So what does all this mean for Bitcoin's future? Halving events are designed to slow down the production of new Bitcoins until total supply reaches 21 million. Right now, we are over 90% of the way there, with around 19 million Bitcoins already mined. Once all 21 million Bitcoins have been mined, expected around the year 2140, there won't be any new Bitcoin created. At that point, miners will be incentivized solely through transaction fees rather than block rewards. This gradual reduction in new supply means that Bitcoin becomes increasingly scarce over time, and if demand for Bitcoin continues to grow, this scarcity could drive up the value of Bitcoin even more in the long term, positioning it as a kind of digital gold. So in a nutshell, Bitcoin halving is an essential part of the cryptocurrency's design. By cutting the mining rewards in half every 4 years, halving ensures that Bitcoin remains scarce and deflationary. This scarcity has historically driven price increase in the years following a halving, though the market can be unpredictable. If you're thinking about investing in Bitcoin, understanding how halving impacts its supply is crucial. But remember, Bitcoin is still a volatile asset, and price changes can be influenced by a lot of factors, not just halving. So always do your research and think long term. That's it for today. I hope the video helped you understand Bitcoin's halving and why it's such an important event in the crypto world. If you found this video helpful, give it a thumbs up and don't forget to subscribe for more crypto content. Got any questions about Bitcoin halving? Drop them in the comment section below and I'll be happy to answer. Thanks for watching and we'll see you in the next one. Bye for now.